Folks,
Okay,
welcome.
great.
Yeah, folks, welcome to our second last presentation of the day. So, I might as well go ahead and set it. We're saving the best for last. Some exciting stuff. My name is Kevin Vincent, and I am the senior contributing editor to Mining Life and Exploration News, which, of course, is Ontario's oldest and most prominent mining magazine. We've been serving this industry now for close to 3 decades. And of course, it is a sister company of Vertex, which is the proprietary global virtual conferencing system that we have developed here at Mining Life. There's nothing like this in the world. It is exclusive to us. And this is our coming out party. This is our very first virtual conference, and the feedback has been absolutely extraordinary. No wonder we've got some great people that are here sharing what is going on with their companies. And boy, if you live in a closet, you might not have heard of this company. But if you're outside of the closet, you've probably heard of Canada Nickel if you've got any kind of interest in the mining industry whatsoever. Mark and his team at Canada Nickel have their fingerprints now and on a very exciting project that is part of the Timmins and Porcupine Camp. And Mark is here to give us an update today on the exciting Crawford project of Canada Nickel. Mark, thanks for joining us today. The floor is yours.
Thanks very much, and thanks for that very generous introduction. And very glad to be participating in the conference today.
Well, we're still waiting. We're still waiting for you to move that big nickel up here to Timmins.
Well, we'll get the site ready to go and get that chopper ready to lift it over. So there we go. We took a big step forward just recently with the announcement of our PEA. Just a brief background on the project. This is the Crawford Nickel Sulphide project. It's a new discovery we made a year ago, September. Since that time, we've already defined what is one of the 10 largest sulfide resources globally. We have a huge amount of exploration potential to go. In my past life, I advanced the Dumont project from resource stage to fully permitted construction ready stage with a broad base of community support, and we intend to repeat that here. And so one of the key pieces of this was an excellent relationship with the local community and local First Nations, and we've been off to an excellent start with TTN, Matachewan, and Matagami. One of the key dimensions of this project, in a decarbonizing world, you've seen more and more press over the last 12 months about how important and how many companies are focused on net zero carbon goals going forward. And what is very exciting about the project, in addition to it being one of the world's largest sources of nickel, for the next generation, is the ability for us to produce large quantities of nickel. We believe that'll be zero carbon nickel cobalt and zero carbon iron because of the combination of we have rocks that, when exposed to air, spontaneously absorb CO2 and permanently sequester it. Again, being in the Timmins region, we're very fortunate to have access to zero carbon hydroelectricity, and we're able to substitute some of the diesel we use by using electricity with trolley trucks. And that puts us in great position to be able to deliver on that zero carbon promise. Just last week, we announced the results of our PEA. Very, very happy with the outcome. $1.2 billion after-tax NPV, IRR of 16%. We'll be producing nearly 2 billion pounds of nickel at just over $1 a pound cash cost and just under $2 a pound of nickel. This is based on, and this also includes a substantial amount of iron and chrome, and I'll talk about our downstream approach, which again, we'll look to add downstream processing in the Timmins region. We're just getting started. Again, for a lot of junior mining companies, the PEA comes after multiple years of exploration. In this case, this resource was locked down just 13 months after we had started drilling, and we've continued to drill since that time. So we still have a tremendous amount of exploration potential and a bunch of other opportunities that I'll highlight further along in the presentation. We want to get our feasibility study out by mid next year. It's an aggressive goal, and we're going to push hard to get there. And the reason we're pushing so hard is, one, given our team's experience with other nickel projects, we believe we can execute on this kind of a timeline. And then B, we really believe that nickel is going to enter one of its super cycles, which you've seen in the late 60s, the late 80s, the mid 2000s, and now We expect to see by the middle part of this decade, with strong demand growth from the electric vehicle sector, on top of continued strong demand growth in the stainless steel side. And the reality is there's very few nickel opportunities, investable opportunities outside of Indonesia. So as I go on, I'll just talk a little bit about the nickel market, because I know a lot of people are more familiar with copper and gold and silver, but there's some very key dimensions of the nickel market, that Crawford is ideally positioned to take advantage of. First off, nickel's always been a high growth metal, much higher growth than copper and zinc, some of the other local metals in the region. And because it grows so quickly, you need to continue to find additional sources of supply going forward. This is Glencore's forecast from a few years ago. They recently updated, and they're looking that we need 9 million tons of nickel by 2050. That's versus 2.5 million tons today. By 2030, they're expecting well over 1 million tons of nickel required just for electric vehicles, versus almost nothing a few years ago. When you combine that continued strong demand growth from historical uses like stainless steel, and again, we do not expect that growth rate, underlying growth rate, to slow down. Stainless steel is an excellent product for a low carbon, low impact economy, and putting this new demand growth from EV on top of it, we basically need to double supply by 2030, versus where we were in 2018. So if you think of all the nickel operations that were in existence a few years ago, we need to find that equivalent amount of production, get it ready, get it built, and get it in production by the later part of this decade. So it's a massive amount of supply that's necessary. And again, very little visibility on new supply outside of Indonesia. A couple things about sort of the structure of supply that, again, puts our project, with the potential to be zero carbon and located, close, as one of the closest nickel deposits to most of North America's automobile plants, and closest nickel project to most of Europe's automobile plants. So first off, nickel unfortunately has had a sort of a dirty nickel supply issue. The first generation of nickel supply, for its first 100 years up until the beginning of this century, was really the large sulfide deposits, similar to what we found in Sudbury. Unfortunately, processing that nickel, unleashed millions and millions of tons of SO2, and anyone who's old enough, remembers acid rain from the 1970s and 1980s because of those sulfur emissions. We've now replaced them with nickel pig iron starting in the mid 2000s, when China came along and we didn't have enough growth in nickel supply to meet what China required. We unfortunately replaced nickel that came with a lot of SO2, and then replaced it with nickel that requires a lot of CO2. So if you look at that bar on the right-hand side, basically anywhere nickel pig iron in Indonesia and similar types of production processes need anywhere from 50 to 100 tons of CO2 per ton of nickel. When Elon Musk was, wanting to decarbonize the planet by introducing electric vehicles, using lots and lots of nickel that comes with a massive carbon footprint was not what he had in mind in terms of, the kind of cars that he wanted to produce. So sulfides in general are much lower carbon intensity. And again, I'll show you a slide that we released just this week in terms of where we're positioned on that global carbon curve, which again is going to be just as important going forward as costs and capital costs and financial returns and everything going forward. The other key structural issue in supply, again, which makes Crawford as a new source of nickel in North America and Europe very critical. If Robert Freeland referred to nickel as the new gasoline on several occasions, and if you look at the structure of oil supply using that gasoline analogy, OPEC at its peak back in the early 70s, was just over half of the oil market. Today, in the nickel space, just 3 countries, Indonesia, the Philippines, and New Caledonia, all are already more than half a supply. And given that the bulk of supply growth for the next 5 to 10 years will likely be almost exclusively coming from Indonesia, with a few exceptions like projects like ours, that supply dominance is going to be very, very challenging to the industry. Again, if you're a Western automaker, if you're a European automaker, do you really want to tie your supply chain to production that's largely Chinese controlled in that part of Indonesia and in places where these countries are short of cash? They have intervened in the mining sector, and so do you want to create that kind of supply chain risk in your production pipeline? And we think that projects like Crawford will be very well sought after by a number of people who don't want to take on that supply risk. So again, these changes in the nickel market, these changes in nickel supply are really setting the stage, for what we think will be a tremendous opportunity for Crawford. One of the great strengths of this project, it's not only a great massive resource, but being in the Timmins camp is about the single best location that you could expect. You could ask for a project. If you drew a 200-mile radius around Timmins, I don't think people realize you'd pick up four of the six largest gold and copper and base metal projects that have been built over the last 15 years. So to the southeast, you've got a Cisco. To the east, the Dumont project that I permitted in my past life. To the northeast, you have Dumont. And then to the southwest, we have IAMGOLD's Côté project, which just started construction last year. And we hope Crawford will be following soon behind. We've got all the major infrastructure in place. You've got an excellent skilled local workforce, and we won't have to depend on fly-in, fly-out labor, which makes many mining projects very expensive. This is a region that's very comfortable with resource development and a very big, strong contractor base ready to support those kinds of productions. And again, we've been in discussions with Glencore about using the Kidd Creek mill, for a smaller scale startup to de-risk the project before we move on to the much larger project, which will be built at site. In terms of the PEA results that we just put out, again, very happy with the performance. And again, that was based on a resource as of last October. We expect the resource for the feasibility study to be 50 to 100% larger than what we have now in the study. So over $1 billion NPV, 16% after-tax IRR, which are very attractive terms for a deposit that's going to last for 25 years. At peak production, will be 42,000 tons of nickel a year. Again, in terms of total output, nearly 2 billion pounds of nickel. You're looking at 20 million tons of iron and 1.5 million tons of chrome. And again, those three metals are all the key ingredients to make 304 stainless steel, which is the most common use of nickel in the world today. Because of the structurally low cost attributes of the project, and I'll talk some more about that in a few minutes, we can deliver all of that nickel at just over $1 a pound cash cost and just under $2 a pound in an all-in sustaining cash basis. That leads to very robust cash flows of over $400 million annually and free cash of $270 million annually. This will be a large-scale open pit mine mill operation. We'll start out at 42,000 tons a day, and then through 2 expansions, ramp up to 120,000 tons a day. Life of mine strip ratio is just over 2 to 1, but in the early years, is lower than that, thankfully. Again, one of the key things is the access to hydroelectricity and the fact that that's zero carbon, and we can substitute that for the use of diesel fuel by using trolley trucks and electric shovels. In terms of the mill itself, it's equipment that you'd see pretty much in every mill: SAG mill, ball mill, flotation, and mag separation. And we use cyclones in a step to just physically separate the deslime, the fraction, which is the part of the flow sheet that you see in these ultramafic nickel deposits. In terms of products, we're expecting to produce 3 products. One, nickel concentrate, which we believe would be the highest grade in the world, 35% nickel, taking advantage of the very excellent mineralogy we have. We will produce a low-grade 12% concentrate, which is in line, standard grade concentrate in line with other sulfide concentrates, and then a magnetite concentrate, which we intend to process locally with just under 50% iron and then an average of 3% chrome. Again, the waste rock and tailings, when exposed to air, absorb carbon directly out of the atmosphere. And again, this is going to be a fundamental key piece of the project going forward. And those waste rock and tailings, are non-deleterious, unlike what you see from a lot of other mining projects. And again, taking advantages of the Timmins location. We would be the 5th largest nickel sulfide project globally, just behind Sudbury. We'd be the largest single mine outside of Russia and China. We would be the largest base metal operation in Canada, larger than Highland Valley, Raglan, and Voisey's Bay, where they're producing on a go-forward basis. You can see what the nickel equivalent production looks like. This is the scale of the project that we expect and hope to start building in Timmins in the not too distant future. We're very well positioned on the cost curve. And as I said in the intro, we're very well positioned on the carbon curve. So with the lower carbon footprint of almost 100% of global supply. This does not include the benefits that we get from the ability of our waste rock and tailings to spontaneously absorb carbon. So when we add that in, when we complete the test work to assess that for our specific project, we're hoping that number goes below zero and hopefully substantially below zero. So we'll have carbon credits to make available to other users in the area. We're going to, the PEA is predicated on delivering our concentrates to a facility that would take the concentrates and then use them to produce stainless steel and nickel pig iron using conventional RKEF AOD processes that you would see anywhere else in the world. Stainless steel production in the US and Europe is the highest margin products today for nickel. This is a technical solution that is available today for nickel, so that's why we've included that. Going forward, we will very definitely have a path to the electric vehicle market, and I expect to see a downstream processing plant alongside the stainless processing plant, which will take at least the high grade concentrate and probably some portion of the lower grade concentrate, to deliver nickel units into the battery chain. Again, in my past life, having discussions with various supply chain participants from around the world, what they would like to see is have a plant where nickel concentrate comes in one end and a battery precursor comes out the other, and that's what we hope to deliver on here. Our concentrate is the highest grade in the world at 35% nickel, higher than Voisey's Bay and Mount Keith. And again, it leaves us in an ideal position to deliver nickel units to the battery sector in a way that's lowest cost for them in terms of their specific value chain. So again, great PEA, but we've got lots of exploration upside. We've got significant room to improve the recoveries from what we had in the PEA. We've got the benefits of the zero carbon footprint. Any nickel we end up delivering to the EV sector will allow us to capture the cobalt and PGM content that are sitting in those concentrates today. We've got opportunities to reduce the CapEx from agreements we have with Tequatagamu in terms of looking for them to do our fleet financing on our behalf and utilize capital sources that are available to them that aren't available to us to help reduce the overall cost of that. And as I said, we've got the opportunity to use Kid Creek as a lower scale starter to de-risk the project. We've got these agreements in place and have been off to a great start. I'm very happy that they are happy with our team, happy with the project, and happy with our approach so far. And I look forward to a many decade working relationship that delivers value for all the members of all the local communities. Crawford, this is a chart from Valley. We're already one of the 10 largest nickel sulfide discoveries and the largest discovery since the early 70s. By the time we're done, and again, we think there's the potential for multiple discoveries in the region, we'll be one of the 5 largest discoveries over time. This is the land package that we've assembled around the area. Anything that's there in pink is potentially a nickel-bearing ultramafic from some of the work Inco did in the mid-60s. We know some of them do have nickel, and so we're stepping around those areas. Our first step out was with McDermott, which we announced a few weeks ago that we intersected the typical mineralized dunite that we saw around Crawford, and we're excited about the potential of not only this target but several other targets that we'll be unlocking over the coming 6 months. Nickel sulfide projects, have become very valuable companies, and we expect to be in a position to unlock this value as we move towards feasibility study by the end of the year. So in summary, and again, thanks for the opportunity to present today, what we think will be the leading base metal operation in Canada, that this nickel project is at the forefront of a 3rd generation of nickel supply, and the first generation that won't have a massive airborne footprint to be able to deliver that nickel that the market needs. And so with that, I'd be glad to answer any questions that have come up.
Mark, thanks for such an amazing and comprehensive presentation. I liken you to the mining's Energizer Bunny. You just keep going and going and going. You got plugged into this Crawford project, a year and a half ago, and boy, it's just been what a ride from there until today, and that ride's not over.
Yep. No, the ride is again. We've we've tried to move forward. And again, it's a tribute to the Timmins region that you've got the resources in place to be able to advance, a project very quickly, and, we contend, we're going to continue to advance it as aggressively as possible, with the feasibility study by mid next year. And then, as soon as the permitting's done, look to be in construction at sometime by the middle part of this decade.
Talk a little bit about the metallurgy. Are you happy with your early indications there about the ability for extraction?
Yeah, so these types of ultramafic nickel projects, the way the nickel's in the mineralization, you can't get 80 or 90% that you would expect to see in a typical copper and gold. The project from a past life Dumont, we achieved 43% recovery over a life of mine, with and the best 5 years in the low 50s. So we've got similar numbers. Again, we're able to take some lower recovery nickel into this project because of the value of the iron and the chrome that we're also recovering. But there's probably a few points of room to continue to improve the nickel recovery, and some very substantial room to improve both the iron and chrome recovery in the subsequent test work we're going to be doing. So again, we've got great numbers so far, and we expect to be able to make substantial improvements to the project, by the time we get to a year from now with the feasibility study.
I'm thinking of this kind of like a 400-meter hurdle race, right? Where you're out of the starting gate, you cleared those first few hurdles. You're probably looking at that first turn. So what kind of hurdles do you anticipate between here and when you ultimately hope to have the green light?
Yeah, I mean, one of the biggest challenges right now is, obviously since gold prices took off at the beginning of the pandemic and every gold company raised money, is the demand for and the pressure on drills, assay labs, drilling crews. If anyone's listening, whoever wants to work on a drill, contact your local drilling company because they're all desperate for people. So that's an initial hurdle in terms of getting the resources that we need to get the project through the feasibility study phase. But so far, we've been lucky, and we've got some great local suppliers like NPLH and NAC Labs, who've been very helpful for us. But then we'll fall into the the permitting timelines. And again, I think the fact that we will have a large hole in the ground, and we will have tailings and waste rock piles. There's no getting away from that. However, the rest of the project is relatively non-deleterious. Unlike gold, sometimes we have arsenic, or sulfides, we have acid drainage. The waste rock and tailings from these projects are non-deleterious. In terms of, again, the ability for these tailings and waste rock to absorb carbon is actually a net benefit of having them available to the environment for a period of time. And so, and the fact that these metals will be going into the provinces and the federal, strategy of mine to auto plant. I'm hoping that we'll be able to go about as fast as you can through both the provincial process and the federal process. And that's the, a key part of the next year for our team is, A, getting the engineering done, but then two, educating, the various provincial and federal departments, so they can get comfortable, to advance this project through permitting as quickly as possible. And again, we'll be starting a very broad-based community consultation process. I think probably a number of people on this call may have been contacted already. So, we'll be getting that out so the community knows everything there is to know about this project. We'll be 100% transparent as we go through it. That's what we did when we did Dumont, and we expect to repeat that here.
Terrific. Mark, thank you so much for being a part of this event today. It's been fantastic. You put together a very comprehensive look at this exciting Crawford project, and I think that's just kind of the tip of the iceberg in terms of what's there and what you've been able to describe. So thank you so much for doing this today. I know you're a busy guy. A lot of people want to talk to you, and we hope to have you back again very, very soon.
No, looking forward to it, and thanks again for the opportunity.
Thank you, Mark.